Hi guys, welcome back to Traders Talk, and we have not been seeing each other for 2 weeks right now. Yeah, because of some travel commitments, we are off for 2 weeks, and I hope that during these 2 weeks where I'm not present, you guys are okay with the market. I think you guys should be okay because, of course, if you look at what happened in the last 2 weeks, mainly the markets was actually quite bullish up until the Fed fund rate announcement last Thursday, if not mistaken. Then, of course, that's where the market actually started to come down. Yeah. So again, of course, as we always say, the market is always influenced by all these all these news flows, announcements, and all. And of course, any rally which happens during bear markets would actually be short-lived. Yeah. So of course, this week itself, we have some further announcements, which is actually quite important for the market, and actually everyone is actually looking up to it, not looking forward to it, looking up to basically how that can actually drive the market. Of course, today itself, the event is actually the midterm elections. And of course, that is actually a major event in the US. But of course, for the market, probably not not going to be a major event unless a significant change actually happens between the blue and the red parties. Yeah, even in Malaysia here is also some fights between the blue and red. So same in the US, blue red, and in Malaysia is also blue red. If you follow what's happening in our country, of course, the general elections is also coming on the 19th, yeah, this month, and of course, that is also a major event for the Malaysian market. But of course, now we are more towards the US market. We're not so bothered what's happening around this side of the world. This week, the more important event is actually the CPI, yeah, the inflation announcement, which is actually expected this Thursday. At what time? Thursday at 8:30 p.m. if not mistaken. Let me just check. 9:30 p.m. Yeah. So Thursday 9:30 p.m. Is actually the CPI, and of course the targeted CPI is 7.9% for the month of September. Yeah, because we are actually announcing the past month's inflation, and of course, although this data is actually a lagging data, whatever is announced on that day would actually give the market will actually react to it. Yeah. Of course, if inflation runs down lower than expected, much lower than expected, then of course that will actually boost the market. And if inflation runs down less than expected or even higher than expected, then basically that will actually give the Fed many reasons to actually continue aggressive rate hikes. Yep. And of course, last week itself, they have actually increased another 75 basis point in terms of the interest. And of course, earlier it was actually expected to do another hike come this end of this year in December, up to about 4.6. Yeah. And of course, right now they are even contemplating to move up rates higher if their targets of bringing down inflation is actually not met. So of course, that kind of statement by the Fed chair spooked the market on Thursday when he actually spoke. Yeah, of course, before he spoke itself, the market actually rallied. Yeah, the market actually rallied up after the rate hike was announced as expected, 75 basis point. But after he spoke and basically when the press and the market digested his statements and the Fed stance, then of course they actually sold off after that. Yeah, but of course I think what's happening so far is that how to say, what is decided basically, they are really relying on announced data. Yeah, if you look from the past announcement, right? I mean, if data is this way, they do it this way. If data is that way, they do it that way. So of course, again, this time round, just watch out Thursday 9:30 p.m., which is basically 1 hour before market opens. Yeah, market is have actually changed from 9:30 Asian time now to 10:30. Yeah, market starts at 10:30. Yeah, so of course I think some people were actually waiting to see the market open at 9:30 yesterday, right? But of course that didn't happen because it starts 1 hour later, and that means you sleep 1 hour later if you are actually watching the market all the way till close. Yeah, that's 5 a.m. in the morning. Yeah, but generally, I mean, I don't wait for the market to close. Generally, up till 11, 12, latest one. Then basically that's time off for myself. Yeah, but lately, how to say? Lately, the more interesting things in the market actually happens. I would say around about 2 to 3 hours before market close. Yeah, but of course that's too late for us to actually wait. And we can always do trades earlier instead of just waiting. Unless you're actually a day trader, then of course that would be a lot of opportunity which is to miss because of the market movements during that time. Yeah. So okay, today we are going to cover a bit on what is that? The markets, of course. Then of course we will actually go into something a bit more on the investing side. Yeah, not so much on trading, but basically we will talk a bit more on investing. What and how to buy. Yeah, because a lot of people how to say, there are so many stocks, you don't know what to buy and how to buy, also when to buy. Yeah, so we'll cover that later after we cover the market updates. Yeah, okay, so market update, let's put up the screen on here. Okay, market was actually up yesterday, right? If you look at the market here, this is S&P 500. Basically, we look at this always as the benchmark of where the market is actually going. Okay, so S&P 500 yesterday was actually up about 36 points, about less than, slightly close to about 1%. And of course, this only came through, I would say, only after I slept. Okay, because before that, basically, it was actually down about 10 points or even less. Then, of course, like I said, the exciting things happens more after you actually go to sleep. Yeah. So yeah, it turned around. It turned around yesterday, and basically it closed up 3 points. 36 points. Yeah, 36 points. And of course, today itself, the futures market was also up till the time just before we actually started this show. Yeah. So yeah, I mean, basically, I would say this could actually still run up till Thursday. I think there is actually something on before that. Tuesday, today, there's nothing on. Wednesday, there is actually also nothing. I'm looking at this Finviz, right? So Wednesday, there's actually nothing on for the US. Thursday, yeah. So the next event is actually the CPI, 9:30 p.m. On Thursday, and on Friday itself, Also nothing. Yeah. So Thursday, it might continue to actually run up till Thursday. If you look at the stocks yesterday, basically all sectors have actually gone up except for utilities. Yeah. This is yesterday's one. Of course, Tesla is a big loser after it continued to actually drop. In fact, yesterday itself it dropped about $10 if not mistaken. Yeah. Probably some fall through from how to say from the Twitter acquisition, because that would actually take some time off from Elon to actually rectify whatever problems he got into paying $44 billion for the acquisition. Yeah. So that's Tesla. And of course, all the other component, all the stocks in terms of tech, it actually went up yesterday. Even Apple was actually down initially about, if not mistaken, about $2, but it actually came back plus not a lot. I think maybe some cents. End of the day. Yeah. So earlier weeks, banking sector has actually had their rallies. It continued to be strong. Yeah, although might be at overbought positions right now for some of the banking stocks like Goldman Sachs. Yeah, Goldman Sachs has actually gone up by quite a lot. Even in last week performance, you can see Goldman Sachs actually went up about 5% in 1 week. Of course, that did not count for the rally before that. Yeah. Okay, so these are the sectors, and of course, right now we would continue to actually eye on the tech sector, the tech and the communication sector here, with the CPI announcement, because that would actually affect a big part of mostly affect these two sectors here. Yeah. Okay, coming back to the charts, right? Okay, now we are at 3,800 points. Yeah. Okay, this is one level which we ask our readers or our readers, newsletter readers, to actually watch out for. 3,800 is actually one point where now it is actually sitting more or less exactly at this level. And of course, if today it actually breaches above this level, then the next level which we would actually watch out for is the 3,900 level here, 3,900 level here. This is actually the weekly charts. Yeah, weekly charts. Yeah. And of course, the lower level, in case any retracement comes from negative news flows out of the CPI, then basically we will actually watch the 3,600 as a strong support level, which has actually proven in the past, yeah, for many times around this 3,600 level, which is also corresponding with the weekly 200 moving average for the S&P 500. Yeah. So this is actually some of the critical price points which you actually need to watch out for the S&P. And going to Nasdaq, right? Of course, Nasdaq, the volatility would actually be much bigger from the effects of the, let me see, yeah, this is a daily chart, yeah, from the effects from the past, what is that, rate hikes, right? I mean, not the rate hike, yeah, the rate hike last week, right? Basically, the drop is actually quite severe. But of course, it didn't also came back to its previous low of around, here is about 10,440. Yeah, so it did not come down to its lowest point, and basically on here it actually came back up yesterday. It was actually up again about 1%, and of course futures today is up, and hopefully it can actually continue to rally back up. So next level above is actually around this 15 11,550, somewhere around here. Yeah, this point here, 11,550 point here. Yeah. And the lows, of course, we need to actually watch 2 points. The closer point would actually be this 10, about this point here, which is about 10,005, I think. No, sorry, 10,600, around 10,650 points. Yeah, around this level here, yeah, as the first level to actually watch to see whether we get support. And of course, if it does not, then to the worst, basically we will fall back to this 10,400 points. Yeah. Okay, then of course that would be the so far the lowest points for the market. Lowest point for the market is actually much good. Yeah, it's actually here. Yeah, this is actually the lowest. Hopefully we don't need to actually go there. Yeah, but of course it may happen. It may happen. And of course, if it happens, in a way, it is good for investors. Yeah, because you can actually get to get stocks cheaper, to actually get cheaper entry if you actually want to get into stocks for long-term purposes. Yeah. So these two, of course, yeah, I mean, for those who have received our newsletter this week, basically we have actually covered how to say, we actually covered certain ways to actually strategies, basically to safely do market shorts or even market longs, depending on which side you'll be more comfortable, because as options traders, basically we can do both ways, and of course there are actually also safe instruments where you can actually trade using options. And of course in the newsletter we actually covered many things this week, what type of strategies you can go, how long the duration you will do the trades, and yeah, what kind of strategies, how long the durations. Yeah. Okay, so these are the things which we have shared during this week's contents. And of course the past contents which we had again many strategies and many examples of trades and reasons, all is actually in our newsletter, and you're all getting it for free. For those who have subscribed, great, you'll receive it in your mailbox every Monday. For those who have not subscribed, please subscribe to the newsletter by going through the link. And where is my link? I will just post the link. I'll just post the link up here. Let me see. I'll just post the links here. Okay, you can actually take the link here. How to do this? Yeah, you can take the link off there, and I post it here. Okay, so that's the market updates, and of course watch out if you are trading. Be light on your trades. If you actually want to go long, there is still some room, I would say, to go long, or of course if you want to go short, there is also possible. But basically use strategies which gives you a bit more of a buffer, especially if you are using credit spreads, right? Then of course that gives you more buffer in case you are actually wrong directionally. Yeah. Okay. Okay. We are done here for this market updates. Then of course now we actually want to go through what we actually want to cover, what and how to buy. Yeah. If you have any questions, please do post it here, and of course I would be glad to actually answer those questions live here. Or if not, then you can actually post it on the Facebook page. Then I would also take it up after the show, not any show. Yeah. Okay, let's move back to the screen here. Okay, so what to buy and how to buy, and it is actually a lot of how to say, in a question which in many investors how to say investors hate, right? And of course, I always say, right, it's how to say, buy stocks or invest in stocks that you are personally comfortable with, especially if you are actually using the products and if you find the products good. And of course, if your friends find the products good and if you use it every day, then of course those are the stocks which you actually need to invest in long term. Of course, here, I mean, you can actually see here some are the examples of stocks which I personally use. Of course, Google, practically every day I would actually use Google. Whether it is actually the browser or whether it's actually YouTube to actually watch videos and whatnot, then of course those are the things which I get exposed to every day. And of course, Google being one of the strongest advertisers in the market, and so far the other competitor, which is Facebook or Meta, right, have not been that how to say, have not been that good to its investors, yeah, because the stock price has actually plummeted quite badly, and at the recent earnings itself, it has actually dropped another 20%. Yeah. So it's a below $100 company. Google is also below 100, but of course it had did some stock split earlier some months earlier. Yeah, and I think currently it's trading about $89. Yeah. And then coming next, of course, Amazon. So far, we don't use so much Amazon in Malaysia. Singapore, yes, of course, I know Amazon is actually in Singapore, and I think now we would be able to actually get products through Amazon Singapore, if not mistaken. Yeah. So of course, these are all the things, expansion and all, which at the end of the day, I would say it will be in every corner of the world, yeah, in terms of e-commerce, and of course the other business which they had is actually on the cloud business, AWS, which is also forming a big part of its revenue. And then of course, not forgetting Apple, right? Yeah, Apple, iPhone, MacBooks and all. Then how to say, you use it every day. Once you start to use it, I think it's like drugs. You get addicted to it, and you would not be able to switch, right? Yeah. So that is how powerful they have actually put their brand, the products, the functionality, and being different also is one of the reasons why it can actually be so successful. And of course, if you look at the price action of Apple in the past few days, right? Again, another opportunity presents itself, because it is actually coming back down to a good level, mainly how to say, after the earnings drive up of the share price, right? Then of course the negative news flows of its plant getting how to say, quarantine, and because of COVID and whatnot, people running away from the plant, yeah, and affecting its Apple production. Then of course the past I think 3 days, yeah, the price has actually came down about 10-11%, which is actually quite a big drop in 2 or 3 days, yeah. But of course, all these are actually temporary production issues, and I think when the production resumes, the new phones will continue to be sold off and out of stocks, right? Out of stock, and of course every year they come out with a new phone, and that's the bad thing about it for people's pocket, because for those who are really avid Apple users, right, they would actually want to change their phone every year. Not for me, of course. It is still how to say, the investment have how to say, the investment have not it's not long enough. I mean, after I changed, right? I mean, I've not used it long enough. It has not depreciated long enough. Let me use it for another few years. Probably I will change Apple 20 or something. Yeah. Okay, version 20. Okay. So these are a few stocks which, of course, at the current levels provides a good opportunity. You can actually go to the price chart. Maybe also I can actually share with you the price chart of some of these 3 of these stocks. Yeah, of course there are many more, but I mean, these are my some of my favorites. Let me just. Okay, this is what? This is Apple, right? Okay, Apple is here. Okay, if you look at Apple price, right? It is actually now trading at 138. Yeah, 138. And of course, this has actually been quite a good rally, but it did not this. Let me. Okay, this has actually been quite a good rally, but of course, it did not manage to sustain, and it came down. And I think after the earnings announcement somewhere here, let's put the daily chart, right? After the earnings announcement here again, it popped up for 1 day only, one day, yeah, only 1 day before it actually gave back everything. Yeah, all this it actually gave back, and now again we are actually coming back to the lows of around here. This is actually the previous low, right? Previous low of about 128. As compared to all the big boys, right? Amazon, Google, Apple's decline from the all-time high is not that great. If we look here, basically this is all-time high, right? All the way here is actually about 30%, and of course, right to today's price, basically you are talking about only 24%. Yeah, which is actually quite low as compared to the rest, and I think the rest are basically going off at least 40% from this all-time high. Yeah. So Apple is a bit more resilient as a tech stock as compared to the other peers. Yeah. Okay, so I would say here, I mean, the whether it was pop back up, yeah, pop back up, because you can actually see here, yeah, it actually came to its previous low here, and of course yesterday itself, the decline did not continue. It actually went up about 50 cents. Actually went up about 50 cents up here. Yeah, so it's actually staying here, and of course today itself, the pre-market price have not come out because it's opening at 10:30, right? I would think probably it will continue to actually be bullish right up till probably before the CPI announcement. Where if it has actually gone up higher in these few days, probably some profit taking would actually happen in Apple before that, and of course depending on how the CPI is, whether it can actually go back up to 157 or come down is another question. Yeah, but of course the thing which we actually always say is that we would not know whether this is actually a bottom. Yeah, a bottom. Like for example, we would not know. Let's say this, for example, somewhere in June, right? We don't know that this can actually be a bottom for Apple for the year. This can actually be a bottom for the year, and then of course it rallied all the way from here, coming back almost to all-time high after June, July, August. Yeah. So of course, if we wait, then of course the train might actually run away, and it will actually go back up, and you will never be able to actually buy at a low price, at a low price, yeah. Then of course it comes to one of a very mechanical way to actually how to say, trade or invest. As long as the levels are comfortable, then you can actually start to put your buy-in tranche, and you don't need to actually wait. And we will actually show you how to actually do that so-called buy-in tranching. So for Apple, of course, at this level, yeah, it can be one level where you actually go in and then you use the buy-in, the tranching method, or most people actually will call it dollar cost averaging to actually get in. Yeah, if the pre-market is already out, it's actually up, going to be to 139.66. Yeah, 139.66, which is about 70 or 80 cents up today. Yep. So this is Apple, and of course we will also look at Amazon. I would say if Apple goes down to 125 at this level is I think it's okay, but if it goes down to 125, then it can be an attractive level. Amazon, it is actually coming back to almost pandemic low. Yeah, this is actually pandemic low is at 82. Currently is at $90. Yeah. Okay. Again, this would actually be yeah. You can also apply the same techniques using, if you're actually interested to hold on the longer term Amazon. And we are not talking about getting in today and getting out tomorrow. Yeah. We're actually talking about a duration of some years. Of course, shortest would actually be 3 to 5 years. Yeah, a duration. And I can also explain to you with the example later on how basically how to say, if you actually put it on fundamental good stocks. I would say not 100%, but of course most of the time it will actually go up over time, yeah. Not 100%, but of course high chance for strong stocks, cash rich stocks, they would be able to actually survive a lot of economic crisis and all. They are more resilient to actually survive. Even though if you're talking about going into recession and whatnot, they can be one of the winners coming out. Yeah. Okay, so this is Amazon, and of course lastly Google, right? Okay, Google, I will use Google as an example how we actually implement this strategy of tranching in your investment by in. Yeah. So again, Google is now at about $88, right? $88. It's not coming to pandemic lows because pandemic low is very low. If you can get Google at 50, I think don't sell your house lah. But I would say try to how to say, if it goes back down here, I think it's a good opportunity lah. But of course, I would not say that it will come all the way back to 50. Yeah. Probably somewhere lower is possible if you're lucky. Then of course you can use the method which I'm teaching you to actually get in at good prices. Yeah. Okay, so I just put on some example on this thing up here. Let's put this up. Okay. So what I'm talking about is actually tranching your buy-ins, and of course some people call it dollar cost averaging. I just call it tranching buy-in, because that is basically I'm putting it much more of a mechanical step for you guys. Yeah, when I say mechanical step, right, basically here we are talking about assuming you actually want to invest in a stock, and I'm not talking about a full portfolio right now. I'm talking about in a stock, basically what is your allocation. For example, if you have a capital of say 100,000, and you want to actually break this down into 7 or 8 stocks to actually invest. Not don't put the 100% in one stock. Yeah, so you need to actually break it down, and of course that breakdown you can actually do it by divide by 7 or 8 is also fine. And of course, let's say you come out with a value of, let's say, $10,000, yeah, based on your so-called portfolio allocation on a single stock. Okay, then these $10,000, right? How you're actually going to get into a stock, right? Is actually on a normal basis, we actually won't want to splurge in and buy in all at one time, especially during bear markets. Yeah, especially during bear markets, because we do not know which is the level where the price can actually continue to go down. Yeah, and of course, nobody can expect, and of course, this method only allows you to buy it at lower and lower and lower prices. Okay, and of course, the expectation when we actually do the tranching in, right, is that the price continue to go down, and of course, eventually when price reverses, then the lowest tranche which you actually go in would have the highest profits. Okay, and this method also how to say give you, how to say, since you break out the purchases, right? For example, when I say you break it to 4 tranches, here we actually break it the 4 tranches, the method which we actually do. And the first tranche, assuming you actually buy at the current levels, 25%, yeah, you break it into 4. So for 10,000, you buy 2,500 worth of total share at current market price of $88. Yeah, $88, and you get, say, 28 shares. You get 28 shares. And of course, you can also do fractional, but let's just say 28 shares you get. And of course, if Google price continue to actually go down, we put in a target price of 10% below the first purchase. Okay, so 79.64 is actually 10% below the first purchase price, 10% below. And if Google continue to drop, you go in your second tranche. Okay, and the third tranche is again 10% of the last purchase, which was 79.64, 10% down. You go in your third tranche, and the last tranche, which you actually go in another 10% down from 71.64. Okay, we are actually putting this a bit mechanical, and there are actually reasons why we actually put this a bit mechanical. Okay, when it is actually mechanical, right, we don't have emotions. We don't really have emotions to see at which level of price we actually want to go in. Yeah, and how to say, if we don't have because firstly we have an intention to invest 10,000. We have an intention to invest 10,000 in Google. It's just at what price, right? So once that is decided, you follow a mechanical process, and these are the prices we should buy in. Okay. Of course, there are many other methods. Wait for it to actually go to keep resistance, hitting moving average prices, and all these kind of things. Those are a bit more uncertain because you do not know where the price levels are. All right, let's say you say, oh, when it hits 200 moving average, okay, you will buy, but that is a price where they might not be able to reach. Yeah, that is a price where they might not be able to reach. But of course, along the way, when you have a so-called first comfortable price to actually go in, then the rest of the process to buy in is actually mechanical. Okay, so if you do it this way, then at the end of the day, you will have invested $10,000. You will actually get 133 shares. Yeah. Okay. And then, of course, we do in an assumption, of course, if the price goes back up, that means basically we had a recovery after you have bought 4 tranches. And if the price move up by 10%, right? 10% from the initial entry price, then of course the returns which you will get is a 29.73%. Okay, this is the method which I've just explained. Compared to a method where you will splurge everything at the current price because of FOMO, you think, oh, this is already the lowest price for the year. I want to buy everything right now because I think this is actually the how to say the lowest. Then of course you would have actually bought everything at 88.49, everything $10,000 worth of shares. You would get 113 shares. Yep, lesser than this because this you average down, right? Whereas this you get 113 shares. Okay, and of course at 97.34, assuming the price goes up 10%, then 10% is the gain which you have made. So comparing to this, you have actually made about 2 times less, yeah, because this you made 30% and this you only made 10%. Okay, and of course the downside again for the so-called dollar cost averaging, right, is that you might not be able to actually go into tranche 2, tranche 3, or tranche 4. Probably only within tranche 1, after you actually made an entry, the price already flew up. Then you did not manage to actually get a tranche 2, tranche 3, and tranche 4. Okay. Then of course that way you can actually see an example here where we actually showed that you only managed to actually go into tranche 2. Yeah, that means you only buy 2 times, you only spend half the capital which you actually allocated. Then you would actually go get a gain, assuming it goes 10% from the initial entry, you actually get a gain of about 16%. Yeah, 16%. Okay, as compared to you 16%. Yeah, and of course as compared to 16% on 5,000 capital. Yeah. And of course, you have another 5,000 which you have not used. But of course, if you compare to buy in everything right now, the difference is actually not that bad because you're only using 50% of your capital. You're getting a return of about $800 as compared to even if you buy in everything, you're actually only getting a gain of $4,000. Yeah. Okay. So the price chart wise, how it actually looks like is actually like this. Yeah. So of course currently 88.49, we are here right now today. Of course, first tranche you get in 25% of your allocated capital for this stock. Then second tranche you go in here, third tranche you go in here, fourth tranche you go in here. This is assuming Google price continue to actually go down, yeah, continue to actually go down, which is basically another 27 or 28% from the current levels all the way to about $64. Yeah, $64 lowest price point here, which is actually 50. Yep. So if this happens, then of course it's actually very good. You can actually use this method to tranche in. And of course, how to say, as I said, we look this on a longer term basis, 3-5 years, if not even 10 years. Yeah. Okay. So assuming the time Google needs to take maybe 10 years lah. Let's say at least we actually take 10 years for Google to actually go back up 10 years. Yeah, 10 years. And of course, you did this one time only. After that, you did not invest in Google anymore. And of course, after 10 years, let's say it goes back to all-time high here of about $150. Yeah. Then of course, the gains which you have actually generated is actually 100%. Yeah, 100%. Okay, so if you divide by 10 years, basically it's 10% return a year, which is not bad. I mean, basically 10% return a year is actually not bad. Yeah. In the past, S&P 500 also gives out an average 10% returns a year, and we are talking about 10 years. Yeah, and of course, I hope that Google does not need 10 years to actually go back to its all-time high. Now, of course, if it goes up in 5 years, then basically you're talking about By doing this, basically you are going to actually get an average return of about 20% a year. Yeah, 20% a year on the capital invested, which is not say not bad, which is very good. Yeah. Okay. So this is basically a mechanical process. You don't have to actually once you set the important thing is set the amount of capital which you actually want to invest in this stock, set the price point which you are comfortable to actually go in for the first tranche, and of course right now you can actually see Google is actually hitting this 200 moving average, right? This is the 200 moving average here. Yeah, it's actually hitting this level again. During COVID, it dipped below here slightly. Now it's again coming back to this level. And of course, for me, based on that, it's actually quite a comfortable for me personally. Not a recommendation, but quite a comfortable area to actually do this. Yeah. All right, so that's what we actually want to cover, and I hope that you actually get understanding on this. Yeah, we want to actually do our on look at good value, look at stocks which you are comfortable in, and of course, when you are executing the buy-ins, then of course try to actually use a mechanical way to actually do it, so that we are not clouded by emotions, FOMO, and scared of this kind of that, whether it will go down further. And of course, if you are waiting too long, maybe you will miss the boats and all these kind of things. You don't have to actually worry. Yep. So if you guys are interested to also get what is that? A copy of that Excel sheet, right? That sheet. Which you can also use it as a base to actually key in the other stocks which I've discussed, or the other stocks which you are keen to actually invest in. Then you can also use that sheet to actually just set what is your initial price to buy in, and then basically what are the second, third, and fourth tranches prices that you will actually target to get in into the stock purchase. Yeah. So that's it, and okay, I hope that you guys have a good trading week this week. Please trade safe, and all the best for your trade this week. Hope that you make a bunch of money from the stock market. Yep, trade safe. Bye bye.